Hey, what's up, guys? It is Thursday, May 5th, and do a quick little update here ahead of the open. We heard from JP and the boys. JP and the boys yesterday, and the market ripped. So I think it was Tuesday I brought you guys the idea of looking for potential bounce this week. As the market's oversold and folks are leaning short heading into the Fed. And the idea that I brought you was the unbalanced put butterfly, the unbalanced put fly here on the SPX. So we were looking at the 40-60, 40-50, 40-40 fly, and look at this on one contract. But when I brought you this idea on Tuesday, I think this was going for about $2 and change. So in my mastery, we bought this fly on Tuesday morning for about $2.10, and then we bought it back yesterday for about 25 cents. So in terms of how that works, risk versus reward, and P&L and all of that. If we buy the fly, right? If we buy the fly at negative 210, and then we sell the fly at negative 0.25, we pocket the difference. So the P&L on that trade per contract would be $185. So we bought the fly at 210, we sold it at 25 cents. So we took home $1.85 per contract. And again, with the SPX, or with the butterfly here rather, the idea is, okay, if we can close Friday, above 40.50, this fly expires worthless. So if we're getting a fill at 210 and it expires worthless, we collect the $210 per contract. But the idea of the fly here is if we do happen to flush, and then in the event, we kind of close Friday near those lows, if you can close in that neighborhood of 450-ish, you're going to take home a much bigger profit. So it kind of has that built-in butterfly. I'm not looking for that pin. I'm looking for, the bounce. I want to get, basically short that premium, but we're doing it with the unbalanced fly, just in case she pulls back here and gets a little pin near 40.50. But that was a solid trade, guys. Obviously, post-Fed, we got the pop. So let me know down here in the comments if any of you took that trade. And if you did and you still happen to have it, you're probably in good shape here. But nothing wrong with taking the easy money. But in terms of what we're looking for today, the thought process was, okay, if we can get a close above the 8 EMA, we might be able to rally up towards that 21. And obviously, basically, that whole move unfolded yesterday. So now the big question is, is there any more gas in the tank as far as trying to squeeze the shorts? Is there any more gas in the tank for this bounce here? Or, does she basically tap out here at the 21 and now we're going to roll over? And I think both are certainly possibilities. But that 21 EMA, that's going to be the line in the sand. But keep in mind, we got sell signals on the S&Ps, the Qs, basically all the sectors. We've got on the S&Ps, bearish squeezes on the 3-day chart. We got bearish squeezes on the weekly chart. So I do think we have more downside. And with that being said, until further notice, until proven wrong, this has the structure of a short the bounce market. And there's your bounce. Now there might be a little bit more, but I do think the idea of starting to scale into shorts, probably for June, July expiration, to me does make sense. So in terms of what could we short here, we could short the S&Ps. I think we could short the QQQs. Something like XLK, I think is a short. Something like the semiconductors, I still think is a short. The easiest trade is probably going to be on one of the indices. So short the S&Ps or short the QQQs is my thought process if you're looking to get bullish here. Now, if you're looking to balance things out in terms of some potential trades to the upside, on our watch list in the mastery right now, give you guys a little bit of what we're working with. UNG looks great. So UNG is buy the dip opportunity. But then you got energy here shaping up pretty good. So this did get a little bit suspect, but it cleans up really good. Back above that 21 EMA. We've got stacked EMAs again. We got green 10x bars again. We've got the buy signals again. I think we could look trying to buy the dip on XLE. You've got ExxonMobil. Looking really good. So I think you can buy that on a dip. And then I think Oxy here sets up really good. Keep in mind you got earnings next week. But I do think Oxy is setting up. So it's looking like the energy, oil, natural gas play. Looking pretty primo here. Then you got USO, which I think on a dip you pick up some June, July debit spreads. Probably looking for a push into 85. So there you have it, guys. Again, hope you found that helpful. Hope a few of you took advantage of that SPX trade. And depending on how today shapes up, we might look for a few more trades like that in the mastery. But I wish you guys all the best of luck today. I'll be talking to you this weekend with an update and the weekly watch list. So until then, trade safe. Go on ahead and subscribe if you haven't already, and I'll talk to you in the next one.